What tax strategies do you hear that feel almost illegal to know?
Oil and gas to me is like, hey, you can go in this kind of asset class, not roll your sleeves up, be an investor,
Working interest.
and still get the entire bang for your buck. And I'm like, whoa, that just is such a mind boggle to me. I would say is almost like sounds illegal.
Hey guys, welcome back to Wealth Made Simple. I'm here with Matt Bontrager, CEO of TrueBooks, and we are going to break down some tax strategies for you guys today. I'm so excited to bring him onto the show. Welcome on in, Matt.
Thanks, Karlton. Pumped to be here, dude.
I'm glad that you came down to California to do this with me because I'm not going to be a California taxpayer much more. And a big part of that is because I've written quite a few checks to Uncle Sam, not on the federal side, but actually just on the state side. So really to the state of California. And tax strategy is one of those areas that me and you have gravitated towards. Many CPAs don't focus on tax strategy. So talk to me a little bit about how you and your firm are helping people uncover tax strategies to help them reduce their tax bill.
So we'll do again first, dude. Thanks for having me, and I'm glad I'm catching you in California. Wherever your next location will be, hopefully I can visit you there.
You will. It's been chosen. It's Florida.
Oh, sick. Yeah, dude, I might have to bring my kids, go to the beach. But no, so let me think about this. So when I think of guys like you and I and the firms that we're building, I came up, first we have to think about where I came from. I didn't do tax. I did audit work as a CPA when I started. Then I quickly realized like, oh, you're the good guy in tax. You're saving people money. The auditor's the one walking around with a clipboard, telling people what they're doing wrong or catching things. And when I started to get into tax, it was very clear to me that the system was, hey, Karlton's my tax guy. I pay Karlton $350 to do my return. I bring all my documents to Karlton and I sit in front of his office like this. He's got a printer to his left and a calculator to his right. And we're going to chug out my tax return right now in front of me. Yeah. You're going to input my forms. I'm going to pay you $300-400 to do my taxes and I'm done. And it was not until I started to see business owners or people that had higher incomes that would say, well, my friend told me about this and I hear I could do that on my taxes. Can I? Or so-and-so told me about this, why didn't you tell me? And so there was a clear need that there were some people that were doing their taxes that felt that they needed more. They didn't know what more was because they had just heard like a riff of something somewhere. But it was clear to me as a practitioner that the game wasn't just to collect their documents and do their taxes. It was you had to put some more thought into it before you gave them their tax return, which is what we call now, I would say, tax planning. So for me, it was early on that I realized like, hey, some people transactionally just want their taxes done, and that's fine. We do that now as a firm at TrueBooks. Yeah. If you just want your taxes done, you have no questions, and your fee's $700, $1,000, $1,200, great. But if you are somebody that wants to ask questions and you know that there's other things you can do to tweak your bill because you were out with your friends or you know now enough about tax strategy, those are the clients obviously that I think you and I want to build our practices on. Yeah. Because when we talk about long-term building firms, that's why I love to always nerd out with you is that's the enterprise value. That's the client that has a higher fee. I always tell people I don't want to be an H&R Block that just churns tax returns all day. Yes. There's good margin in that, but it's just such a tough business. Yeah. Such a tough business.
The traditional accounting firm does chug out tax returns. That's the business model. Yeah. When you go to school to be an accountant, is the path to go to the Big Four or to then start your own practice? Or what is being taught in accounting school? Because I didn't go to accounting school.
Dude, that's a really good question. So when I was in school for accounting, it was the only thing that was preached that was the gold standard, like you needed to make it, was to go to the Big Four. And I like that now because I am very grateful that I did that. I take a lot of pride in going to Deloitte was where I went. In Vegas, we only had 3 of the Big Four. But, and keep this in mind too, I only took 1 semester of tax. And I'm a CPA that I'm known as a tax guy now. So that's another thing. In school, you're not even given a lot of tax education. And tax for me in college was so difficult, dude. It was such a concept that like didn't make sense to me. I wasn't heavy into tax in school. It was all audit focused, financial statement focused. Yes. That's why when people ask me like, I'm a true accountant at heart. I like financial statements. I like good balance sheets. But yeah, so it's clear to me that now when they tell you to go to the Big Four, that for me was a resume builder. Yes. When I left Deloitte, every person wanted to talk to me. I almost felt bad for the recruiter because she got me 4 jobs, got all 4 offers, didn't take one of them. I chose to stay in public accounting because it was going to go to Caesars to be like a senior accountant or a manager. Yeah. Go to Diamond Resorts was another offer I had to be like an accounting manager, managing people that were in like their 50s and 60s, and I was in my young 20s.
Okay.
And so it was clear to me, like, I don't want to go to a back office and work as an accountant. I want to grow a practice and have multiple clients in public accounting. I want to
Yes.
work with,
Talk about the differences between public accounting versus like
Yeah.
corporate accounting.
corporate accounting. You show up at the same building every day. Maybe they have the, locations, or you're traveling around the world, but you work for that firm. So like if I would have went to Diamond Resorts, I was an accounting manager for Diamond Resorts. I would help with their financial close process, get their financial statements together, assist the auditor in doing their audit annually, stuff like that, right? Working with internal staff, same team every day. Public accounting, and it's funny you asked, I was just explaining this to somebody. People think public companies. No, public accounting is you are working with the general public. You are working with a variety of clients in a book of business.
Right.
And that was what I wanted to stay in. I didn't want to stay working for one, right? It just really slows your growth.
Yeah.
Then you're immediately jumping to the corporate ladder structure. Versus, you and I can go golf with somebody and pop a client for $100,000.
100%.
Exactly. And so I was like, whoa, that as a talker and as a, someone that wasn't so nerdy and like reserved in accounting, I'm like, whoa, I need a little bit more freedom here to talk to people. And that's where I realized taking those offers or seeing those offers, I was like, I got to stay in public. And then I stayed in public after Deloitte. But in school, it was go to public accounting. And still, no one even up to that point talks about starting their own firm. I think you and I beat that curve. I think we'll see a lot of it now in the next 5 to 10 because the accounting industry is really shrinking as far as professionals. But that was never talked about, dude, going out and doing your own thing. It was like you had to have like an uncle that did taxes that you just like started to work in his shop on the summers. And then you started to slowly, that kind of thing.
You said you needed freedom to talk to people, which obviously serves your personality, which is a big part of why your brand is out there and why your business does very well. But do you feel like most accountants even want to talk to people? What is the traditional accountant like, knowing that you've kind of been around them growing up?
Complete opposite, dude. And I still have friends that I went to school with now that I see our personalities have somewhat stayed the same. They're a little bit more reserved. You can put me to wherever and I'm going to talk to whoever. And that is also why I tell people, like, I've had any sort of success in this business, right? Like you and I both know growing a business is hard. Finding customers is hard. Managing staff is hard. Keeping customers is hard.
Right.
You're never going to find a customer if you're too scared to talk to people. And so what I've noticed is now in the accounting field, for us, even just having normal staff churn and finding talent for our firm, I immediately look at it through the lens of, if I have to fill an admin, bookkeeper, or tax prep role, that is tremendously easier, as I'm sure you would agree, than an advisor role.
Of course.
Advisor, I explain it as, I not only need you to be a nerd, I need you to be comfortable looking at somebody, talking to them, giving advice that you may be wrong in saying it sometimes. Like, accountants are so scared to even say something because as if they're going to get sued immediately if it's wrong. And I'm like, relax, you have E&O insurance. You're a human. People, so if they can't break that barrier, and even if they want to, it's like, it's tough. And so most of the time in accounting, you have that reserved analytical personality, which I tell people is great. That's what firms need to be built on, but you need 20% of your staff to be able to go out and conversate with your clients.
Yes, you do.
You can't just have number crunchers.
What happens when you have a CPA that's super reserved and doesn't really want to communicate, and you're trying to figure out ways to save money? I mean, we see these types of customers come over to us all the time. They feel like I have a really smart CPA that's my dad's CPA. He went to Harvard. He went to this school. But I just don't feel like he's creative. He's so reserved. He's hard to talk to. That
to me is a pure trend. Like because again, we hear the same thing. Like, hey, my guy's sharp, but he's just not really proactively and thinking about ways to do things. To me, I immediately think, is that person older? Because as you and I know, this whole stat of 75% of CPAs are set to retire. I think it's that. Like, if me and you were in our 70s right now and there was a new wave of AI, or the short-term rental loophole was new when we were in our 70s, me and you are on the way out. I don't want to take time. What do I care? Let the young cats handle that.
Let them go have fun with those strategies.
I have a business that has been built. I already know what is in my lane. Like, it's at that point, I think that they don't want to learn new things. If that is so now if that's that avatar, if the avatar you're explaining is younger, that to me is they find it too risky to learn new strategy and new tactic in the industry, which I think then is tremendously going to hurt them, because then you are stuck in my head to being, you are going to grow in the corporate ladder, which is not bad, but don't think you're going to have an easy time going out starting your own firm with that kind of mentality.
Yeah.
Me and you both know, as starting firms, we have to listen, which, I got a good one after this one to talk to you about that's recently come out that I think will be not like the next PPP, but a big craze that's going to cause a lot of people to riff for a second, like BOI was.
Yes.
And it's, if you're not on top of those trends and willing to educate yourself and come out in front and talk about it, then you what is it? You're not going to be that valuable to the people that need that information because you're too reserved. It's like worse, like you have the talent, but you're too scared to let it out kind of thing.
Yeah.
Is what I look at it as.
I literally see that happen so much. There's
Yeah.
even CPAs that do focus on tax, but they're afraid to share information because they're afraid to be wrong or afraid to try to help somebody out in the public setting. How have you been able to acquire the type of clients that you guys are acquiring inside of your firm? Was it through the Bigger Pockets relationship that you had? Is it now through YouTube, social media? How are you guys primarily acquiring clients?
Now has to be online content. And I always share this with people, like, I don't have a huge following. I have 2 reels that have attributed to my like roughly 40K following on Instagram. And we get a lot of traction there. So short form reels and things like that. Hey, DM this to get this free resource. I think in the tax world, it's awesome to give away little templates and gizmos and things like that.
Of course.
We obviously have the avenue of paid ads, but I would say referrals. Referrals is still huge, right? You get that one good client. Like we have these 2 guys that are going around the Midwest doing syndications and raising money, buying these apartment buildings. And either on the LP side, like, hey, I'm about to do this LP deal. I need a CPA that is more in tune with that. Great. Or they have other buddies that are doing syndications, and then we obviously want those because those are bigger accounts, more complex work. So I would say referrals and then online media. But, and that's why you're the GOAT of that, dude. Give you the credit all. That's how it's so powerful.
We are focused every single week on trying to do better than how we did the previous week and then the previous month. And so it's just a constant exercise. For me, media was my focus way before tax. Like I was creating content as a fitness influencer.
The training,
Yeah, I was a personal trainer. And so when I got my first tax bill, I called my mom up and I said, hey, I don't know what I'm doing wrong. And that's when I decided to quit working at Gallo, which was the wine company I was working for, and then go over and start working with my mom. That's actually how I got into tax. When did you decide to switch from being an accountant to wanting to be a tax strategist?
This had to have been, this is a funny story. Probably like I graduated college at the December of 2014, started at Deloitte January 2015. And it had to have been end of 2016. No, so maybe 2017, 18. I went to a firm that stuck me in audit. And I had 2 close friends that I'm still very close with, kind of like, little son me and kept me up on like how to do tax. But they were on the tax side. I was on the audit side. I had asked the partner if I could do both. It was a hard no because it was a firm that had 3 partners. I worked for the 2 audit partners. My boys worked for, obviously, the tax partner. And it wasn't until I started to sell some of the tax work. Like I would come into the firm and be like, hey, Ernest, Kai, I have these 2 new clients. Go tell Dane. Dane was the partner. And then he was like, okay, like this kid obviously wants to do tax. He's out here selling it. He's not even doing the work yet. But Ernest and Kai would do the work that I was selling because I didn't know how to do it yet. And then I started to do, I'll never forget this. Part of how I started to build like this, like speaking in front of people, I would go to real estate brokerages and say, hey, let me come in and do like an accounting and tax talk for 40 minutes, like a lunch and learn, buying Chick-fil-A. And so I did those, and I brought the partner along to one of them because I was like, hey, dude, like you see, I'm about to represent the firm here. You probably want to come to this.
Yeah.
And he was so annoyed that he had to come to this, but we walked away with like 10 different clients. And then he was like, oh, whoa, this kid like might be kind of onto something. I'm like, yeah, dude, like all I did here, we went and bought these people lunch. You talked for an hour and you could tell 30 minutes in, he's kind of annoyed. But then at the end of it, you know how all these tax talks go. You talk for 40 minutes, you get flooded when you're done with questions. People come up to you, that you're vibing, you're exchanging numbers, they're asking for cards. And he was like, holy cow. And I'm like, yeah, dude, like, and I don't even know how to do this yet. So at that point, he became a little bit more open to the idea. But then I left. I went to a cannabis firm after because no one in Vegas wanted to touch that. And that was good experience. So I went over there and got to do tax and accounting. That was my first position where they were like, hey, okay, you have experience in both. Because by then I started to do a little bit of tax.
Yeah.
They were like, hey, we'll let you do both. Most firms make you choose. It's very rare for a firm to let you do one or the other. That's why at a school you have to pick.
Yeah.
Yeah.
When it comes to being an audit, what did you learn about being in audits that most taxpayers don't know?
Yeah. Good financial statements, which I think, right, like me and you vibe out a lot about. It's the backbone of any good business and any good tax strategy. Like, aside from tax, you want to run a good, sustainable business that feeds your family, that you can leave to your kids, that you want to sell to a partner, bring in a partner. You have to have good financial statements. You want to be bankable and get good, loans and debt. And that's what audit taught me. Audit taught me to, one, deal with professionals in a professional manner. That's why I like Deloitte. Like I was in rooms where, You at that point, I'm 20,
Yeah.
and I'm with high level, CEOs or directors of these big businesses and casinos where I'm watching them conversate. If you looked at it from a billable hour perspective, you're talking about 5-6K an hour of people talking when I'm only a staff. So just understanding how to communicate, professionally and timely, but then asking questions to do my job. So as an auditor, I had to go in and say, like, cash counts at the casino, dude. I'd go in there at midnight and you're walking the cage and you're having to count chips. And as a young kid right out of college, I'm talking to a supervisor who's probably been here 30 years, telling them, like, if they would try to sway the conversation one way, I'd have to be like, no, I need this. I need to look at this. I need you to give me this. Hey, can we pause while we talk about this? So doing that at a young age made me very comfortable having those conversations. But outside of like the people skills and understanding how to communicate, it was good financial statement work. Like if you said your balance sheet had $2 million in cash, I need to test a sample of it. And so understanding how to work with the financial statements was big. That's why I think it's made me a stronger tax person for sure.
What are the biggest mistakes you see small-based business owners making when it comes to their accounting?
The frequency in which they touch their accounting. So they might have QuickBooks, as you see, but they touched it 4.5 months ago and their bank feeds are disconnected.
Wow.
And so if I had to break that down, like I'm referring to QuickBooks, right? Any sort of accounting software, you sync your bank accounts and it every day will pull in your transactions so that ideally in a perfect world, you go in and you say, okay, $20 to Staples office supplies.
Yeah.
They don't frequently look at it. And so it's like, what's that saying? Like you have to inspect what you expect. And if you expect good financial statements, you want to know where your numbers are, you got to frequently look at that. And so business owners just don't do it.
Yeah, I would agree with you.
See how it absolutely kills them. It hurts them so bad.
What's the frequency of how often a business owner should be, one, looking at their financials, and two, making sure their accounting's up to date?
At a minimum, I'm a monthly guy. So if you want to say that you're going to spend the last week of the month to catch up your financials and then get your financials in order to review for the month, okay, but I'm a weekly. Ideally, it would be weekly. You'd have 2 hours blocked on the calendar. You would have the discipline to go in, and you would just start moving around things. Start categorizing numbers, run your balance sheet, run your P&L. And I always call it the gut check test. Like anytime a new client comes to our firm and I hop into a broken QuickBook file or a messy set of financial statements, I always will say, hey, Jim's my alias name that I use. Jim, here's the story that I see. You tell me if it reconciles. Jim, you made $400,000 and hey, you took home 80. No, that's not right at all, Matt. We at least did 800,000. I had one client and I'm like, well, this is so far off then, Jim. Because I'm seeing 400 at the top and 80 to the bottom, and you immediately in your gut are telling me that it's off.
Yes.
So, something like that, yeah.
When you guys get new clients that come over to your firm, what are the biggest mistakes or biggest opportunities that you notice on the tax returns?
Dude, so many Schedule Cs with no S Corps, which just blows my mind still. I saw a guy the other day from NorCal, $3 million on a Schedule C as a broker. Insane, dude. Oh. It makes me think like this is like whoever is doing your taxes is so inexperienced.
Yes.
So inexperienced. Schedule Cs is a big one. And again, as a real estate guy, I have to call out depreciation. No depreciation at all. Depreciating land. A lot of that stuff still, which I'm like, whoa, you would think that like anybody preparing that return has somehow seen a video of yours, mine, Amanda, someone, but nothing. And so that is still just very shocking to me. But hey, for us, it's good.
Where do you feel like the industry is at when it comes to taxes? Do you feel like AI is coming for the tax preparation side, the accounting side, and the advisory side, all three?
I think both. My stance on AI as a firm owner now is I think at a macro level, it is going to commoditize the price of things.
Yes.
And it's going to lean into back to the people. You better have really good people that are going to basically be customer relationship managers to answer the questions that they have. Because to me, doing the tax prep, doing the bookkeeping, doing the research is going to get so commoditized and compressed because the systems should be able to do it for us so fast.
Yes.
So what am I left with? You're left with competing on price. And also competing on like your systems better be able to allow you to do that same service at a cheaper price because the next guy's going to do it cheaper. Yeah. And at the same time, you need to maintain that good customer service because at the end of the day, we're all humans. We want to communicate. Unless you have somebody that's cool with just sending emails, they're going to have to figure out how to maintain that good customer service human to human. That's my thought on AI.
My philosophy is I'm going to figure out who's doing it, and then I'm going to do it the best, and then I'm going to charge the most for it.
I like that too. Yep. See, I like that too. And I think though you'll be able to charge the most for it because you'll realize that with those tools, the value will be there. You're going to find a way to add to the value stack instead of saying, hey, let me trim it and still charge the same thing.
Yeah.
Because that's what the tool should allow us to do. Like right now, I look at a preparer. You have a good tax preparer if they're doing 120 to 200 returns a year.
100%.
Depending on complexity, I want that preparer to do 240 now.
Mm-hmm.
You know? And so does that mean that my price to the client necessarily has to change? No, but it means that the focus is going to come back to the advice, them knowing that on April 15th, not only was my payment for last year due, but my Q1 was due for this year. So I should have come to them on let's just say, you know, because we're all going to tell them their tax bill. If you're right, like if we're good accountants, Q4, I'm going to tell you what your tax bill is for the next year. We're planning, we're ahead. But they're going to get a reminder on March 10th. Hey, in a month, you owe this much, and I think you should pay this much. And also, just so you know, XYZ ABC.
Yes.
Because I have the systems to give me all that data and get to them early.
Yes.
But right now, humans are trying to do that. And so, you know, oh, hey, your tax bill's due in 4 days and it's this much money. And then it's April 21st and they're like, wait, dude, why didn't you tell me that I had a Q1 payment due? And you're like, because you were relying on your single human staff to do it and you didn't have the systems to pull together all this data to get them equipped to communicate that.
Yes.
So to me, it's going to be all about like it needs to smooth the customer journey and the entire experience needs to seem very comprehensive. And that's where, for me, our biggest cost is our people.
Of course.
Like, dude, we've had years where 60 cents on the dollar is to people. That's way too high. And so systems, I think, should compress that.
I would agree with you on that. I think the more and more AI gets incorporated into the tax space, the more and more certain items that a human being would normally do, like data requests and things that we have, you know, staff members do, was going to get replaced by AI and AI follow-up. What items are you guys trying to incorporate inside of your practice to try to stay ahead of the AI curve, or have you yet?
Yeah, so we do GPT, we do Claude. They're really research tools now. Mm-hmm. And I think the next version of what I'd like to start to build out is, as you guys know, anybody here that's using these chat platforms and things like that, you can almost have mini projects. And when I think about it is, like, I love the thought of ClaudeBot just running rampant in my firm, because what I would want the ability to do right now is if I walked in and said, hey, I have a meeting with Jim in an hour, give me everything I need to know about Jim. That would tell me what invoices he has pending, what engagements he's current on, what documents we're waiting for him to sign, what his P&L is showing for the prior month, where his tax returns are at, and what open items list we need to get. Me relying on a staff to do that, good luck.
Yeah.
They would call that job, I need 2 days to get you this information before the meeting.
Oh, no.
When I'm like, a system would compress that so fast.
100%.
So for us, I think it's Claude that's going to be the biggest. But now we've been geeking out and doing a lot of research on these disclosure. I'm honestly terrified for when the IRS makes an example out of a firm using AI tools and really crushes them. I think it is it's the biggest threat that us as firms face to shutting us down, and also just like jail time, because it's so big. Like, my understanding is it's these Form 7216 disclosures and things like that. Every instance that is an infraction of some sort, $1,000 fine, but also up to a year of imprisonment. Mm-hmm. So I'm like, are they going to necessarily do that? No, but do I think that they'll throw the book at someone to make an example? Maybe. Who knows? And I just pray that, we're not roped into that somehow or something, because we're trying to focus on getting clients to sign it. But now the objection is, how do you tell the client that we need this disclosure?
Yes.
And I've already had to do it, a few times, and luckily I'm so far success, 100%.
Good.
I've had some pushback, but people, if you can't now communicate to your clients on why you need to use those tools, because the client's going to say, hey, I want you doing it. And you're like, Jim, don't worry, I'm still doing it, but I need the assistance of these softwares to give you a high-level service.
Yes.
And so that's what our focus is now, is getting clients to understand that, hey, we need to disclose this to you. You need to be on board with it, because trust me, it'll bring you a better experience, which is, I think, peace of mind and dollars. That's 100%. What we're giving our clients. So,
100%.
Yeah.
What tax strategies do you hear that feel almost illegal to know?
Oil and gas and the intangible thing has always been an interesting concept to me, because it's an intangible asset kind of thing. And even the passive, like me and right now as tax people, the IRS basically is like, if you're going to take the loss, show us you've rolled your sleeves up and you're involved in it, which is this whole passive versus non-passive. Oil and gas to me is like, hey, you can go in this kind of asset class, not roll your sleeves up, be an investor.
Working interest.
and still get the entire bang for your buck. And I'm like, whoa, that just is such a mind boggle to me. But hey, I mean, I'm all for it though. So yeah, something like that I would say is almost like sounds illegal, but I'm over the depreciation thing. It's very clear to me now, like, hey, they're giving you incentives to buy these assets like real estate and develop it. So
Right.
yeah, what would you say? I mean, we've been hearing a lot about this movie production stuff, dude.
Yeah.
Yeah. It's
I
not
feel like
something
I'm the one that does.
you have to be the leader in it for sure.
Yeah.
I've had people tell me that they've heard of it from you.
Yeah.
And I'm like, and they're like, hey, what do you know about this? And I'm like, this is what I know.
I think what it is the fact that my brand has gotten so many movie producers to come
I'm
to our
sure.
firm. I had no idea that Code Section 181 was something you can offer to, regular investors.
Yeah.
I thought it was just something for production
Like the
companies.
operators.
But if you sell or finance the production rights to investors, they now become owners of the movie film. If they become owners of the movie film and it's leveraged, it's no different than them taking a down payment to go buy a vehicle that they're putting inside of their business. They get to write off the at-risk capital that they have plus their initial investment. So that's what's pretty awesome about the movie film is it's a 4-to-1 strategy. They put $100K in, they're getting a $400,000 deduction. But the movie has to have it can only have 20 million of total expense. It has to be in distressed areas like qualified opportunity zone areas. And 4% of every movie is the amount of 181 that can be raised from investors because there's about 16 million of debt on the 20 million of production cost. So
I feel like 20 mil is still a big movie.
yeah, it's still a pretty big movie. We have
film.
Martin Wahlberg movies, Jackie Chan movies. Our clients have invested in some really cool movies that they had the ability to get access to. So, yeah, it's been pretty awesome. Of course, they're going to have to deal with the recourse debt. So when the movie starts producing cash flow, they're going to have to report the income, but the income's going to go back to pay the recourse debt. So they're going to feel like they have phantom income on their tax returns because they're not really receiving that money. So this isn't a tax mitigation strategy. It's just a tax deferral strategy, if you ask me.
Yeah, let me ask you a question too. So, like one thing we run into, this happened to me a few weeks ago. Investor out of Scottsdale. I'm on the phone with her, and she kept hitting me with the, well, what else? What else? What else? And I got to the point where I'm like, lady, you don't need to worry about what else. You don't have any money to do anything else. So I'm like, do you ever run into where clients are like, well, what else can I do? And then you've realized like you are essentially tapped out because the way that I look at tax strategy is you either have to find out first the strategies you can implement where you're going like left pocket to right pocket. Like I consider that like an S Corp.
Yes.
All the money's mine. I'm making elections to do things. I'm not necessarily spending to save.
Correct.
But then there's obviously strategies where like, hey, go out and buy a $3 million property, let it cash flow, make sure it's a good deal. You're going to get these big expenses, but you have to buy a $3 million building.
Yes.
So do you ever run into where you're just like, hey, you're tapped. You can't do anything else.
So it's first understanding what type of taxpayer you're talking to. Are you a taxpayer that wants to focus only on workhorse strategies that that revolve around us putting money back in your pocket, aka converting your LLC over to an S corporation, doing the Augusta rule, doing the home office? These are all expenses that you already had that we're just recategorizing and putting money back into your pocket.
Yeah.
Or are you more interested in tax advantaged investments? Because oil and gas and real estate, the two big ones that most of our clients love, those are tax advantage investments, including even the film strategy.
Yeah.
Right. So
That's a good point. That is investing.
yeah. And so you first want to level with them, right? It's like, hey, here's all of the, workhorse strategies that our clients love. These are the ones that are going to put money directly back in your pocket or at least stays in the household. Children on payroll, Augusta rule, home office, like these are just our workhorse strategies. ARP, right? This is just going to show up every time in your tax plan. Let's just get you some wins over here. But you have to be the type of client that wants to be able to do tax advantaged investments if you want big write-offs. And our clients that are doing tax advantaged investments are qualifying as real estate professionals. They're doing the short-term rental strategy. They're investing in oil and gas with a working interest. There may be a GP in a bigger investment where they have material participation. So that requires capital. A big part of how we qualify someone, Matt, is not just based off of, okay, well, do they have the income to be able to do tax planning? Is do they have the liquidity to do strategies, right? Because we know what the workhorse things are, but all of these other strategies, which is what customers really want to pay tax strategists for, they have to be able to have the money to jump into the strategies like that. You can't just walk into a cost seg without a down payment.
That's a good point. I love how you've blended the concept of investing with the tax strategy side versus, because people do, right? They'll come to us thinking that it's just this magical pill that they can pay no tax. And I'm like, no, that's why I use the term a lot where I tell people we optimize your bill, which to me is the optimizing of what you already have. Like I can move around pieces on the same puzzle and bring down your bill.
Correct.
Which to me was like always like the first version of tax. And that's why, again, a big respect to you is like, you're right. This is more of an investing concept where we are coupling tax and investing to where you get major tax benefits, but it is more of an investment because you're having to go out and produce and put money into these deals. So, yeah, I wish I would have had that in my back pocket because I'm like, she just kept pounding me. And I'm like, lady, you're broke at this point. You can't do anything else. You are only being able to optimize. You don't,
And you make a line in the sand. You're like, dude, I totally get why you're asking these questions because you're wondering the differences between what are the workhorse strategies that I don't have to spend money on and what are the tax investment related strategies that I'm going to have to come out of pocket for. So let's just bottom line it. How much capital do you have to deploy in tax related strategies? And you get that answer from them, Matt, because then everything else doesn't matter. Right?
You're right. You almost come to
it doesn't matter.
Yeah, you're right.
Everything else doesn't matter.
That cuts down the work that you have to do once you know the number.
Perfect. You have $200K to work with.
Yeah.
So I know I can go do the Augusta and everything else with everything else that you have. This $200K I can only deploy. So should I do $50K working interest, oil and gas? $150K gets me about $600,000 of a short-term rental. A cost segregation study on a $600K investment property is going to reap you out possibly about $200K in year one cost seg. This is all you're operating off of now. Your strategies are going to be Augusta Rule Management Company, kids on payroll, and then your investment related strategies are going to be this because we used all 200 that you said you had available, and that's your tax plan. That's your tax
money,
plan,
dude. It's so clear to me now because you're right. You would almost come to a definitive answer at the there can't be this run on. Well, what else? Well, what else? Because you're saying you have a fixed amount that you have to work with.
And
never thought about asking.
And you are now being put in a position where you have to sit there and show your expertise when you already know this person doesn't even have any of these strategies you've already mentioned implemented. So why do I have to sit here and just keep going down a Rolodex of strategies that you clearly don't qualify for to just confuse you even more, right? It's just going to confuse you more. Imagine bouncing from teaching somebody real estate professional status, which is already a very hard complex to even wrap your head around. If you understand real estate professional status, you understand one of the most complex areas of the tax code. I just want to let you know that. To then bouncing over to charitable remainder trust and then talking about a private family foundation, all in the same conversation.
Yeah, that's such a good topic, dude.
But people want to hear all of this for what? To know that you know a bunch of strategies? No, I want a tax strategist that can put together the perfect tax plan for me based on my situation. And Matt, today my situation is I have $700K taxable income, but I only have $200K of liquid capital to invest outside of my emergency fund. This is what we have to work with from a tax savings perspective.
See, and so how would you look at that then? Because what I like about that is that brings you to almost a definitive plan to get with them and say, hey, here's the plan for this year.
Yes.
And then you just grow with them, I assume, as they start to make more money and have more disposable income for the next investment. Then that's when you just bring it up next.
Yeah, because your first year is about foundation. When we build your tax plan in the first year, it's just about setting up strategies for you. You're in foundation year.
Yeah.
Year 2 is optimization. Now that you know how to ride a bicycle, how do I get you to do a wheelie? And how do I get you to go 20 times faster than how you're currently riding it right now?
Yeah.
How do I layer on top of the one investment property that you bought last year and now we own 2 or 3 investment properties, the one oil and gas deal that you did, now we own 2 or 3 oil and gas deals, the fact that we only set up a couple of LLCs, now I got you with a trust and estate attorney and now you have a revocable living trust that now is tied to your entity structure, right? So optimize now.
That was the one thing I saw that you posted recently too, which so we were talking about this maybe 6 months ago, COO and I, were this deal flow community kind of thing.
Yes.
Because as accountants, you and I know, we see so much deal flow.
Of course.
Our clients are doing it. We have investors coming to us saying, hey, do you have clients that want to be involved in it?
Of course.
So I saw you drop something like that. I'm like, so smart.
Yeah.
Because again, it's like we all could build almost our small private communities of deal flow.
Yeah.
It's huge.
If you're an accredited investor, sign this document, this document, this document, this document. I'm not your fiduciary. I just get a bunch of deals and here's my community and we're going to do coaching calls and let these people come on and solicit their deals to you guys. And you guys will go through our course videos on due diligence and how to vet deals and get the terminology so you know what an LOI is and all these fancy terminologies that they're throwing out at you. And now you have a community.
Oh my gosh, yeah, you're trying to equip them to help understand and underwrite their own deal. Yeah,
yes.
That's good too.
So that way you know how to underwrite these deals. Why do I want to do that? Because the more you know how to underwrite your own deals, the more you can bring these deals into the tax strategy realm. As you know, the higher the net worth clients that we get, the more they have access to private deals in tax strategy world. That is so unique, such unique. This equipment leasing, this, charitable structure that I heard about.
All the PE stuff is getting crazy.
All of the private equity stuff, right?
Crazy.
The general population will never get access to any of this stuff unless I create a community for them.
So smart, the education piece to really teach them, because you're right. It's either they're going to come running back to you for it, or why not just equip them up front?
Yeah.
Then it helps the deal flow move faster too.
Without a doubt. So that's what allocation room is. And all right, so I'm going to hit you really quick with 5 tax strategies, and I want you to rank them in S tier, A tier, B tier, C tier, or D tier when you hear them in the order that you feel like they would most likely land. All right, here we go. First strategy is children on payroll.
I like that. I'm going to rank that as a B. Because so to me, my concept there is it's not a lot of money if you stay below the standard. So I don't find it as a huge savings tool. But for me, if you have the ability to pay your kids at a young age, legitimately, for me, it's the building the nests and the money being put to work. That's what's important for me. Like, I hate when people pay their kids and then they don't end up putting it into the IRAs and the Roths and things like that. So I'm like, great, you just basically bought your kids' tuition and then just went and spent it at Costco or something. But yeah, so I'd say B. So it's not a big amount, but for me, it's very important when they're young. And I think people that can employ their own kids really should take pride in being able to do that and what you're doing for their future so young. So and again, as a father of 3, like, that's what I care about. Building the nest, baby. Yeah. So
what about the HSA?
I gotta go C, and that's because it's small dollar amount and it's got a lot of powerful components to it. Like, I like we've been saying triple tax benefits. It's tax free going in, tax free coming out, and it grows tax free. But I'm gonna say C just because the dollar amounts are so small.
Real estate professional status.
Oh, see, that might be an S for me, dude. You're killing me with not telling me the rest of these, but I'll go A and I'll gamble on something being better. But that's way up there. That's huge, right? That's what our firm is built on.
QSBS.
See, now I might rank that A, or I might rank that S, because if you have a true exit like that for that amount of dollars, it's huge.
Private family foundation.
See, that's another high one. But what I think I'm left with, am I left with S, A, B, C, D? That might have to be D for me. D. So again, solid there, but I don't really know what amounts we're putting to it. And so, I feel comfortable then with where the rank was. Yeah. What would be your S?
I would say real estate professional status, just because it's the godfather of all the strategies.
We just had a guy, it was cool. I finally got to see it. I've never had this happen where father owns the business, son is on payroll, set to really take over the business, started to buy rentals, son's super sharp, PE driven and all this stuff, like really good experience. And but wasn't able to hit reps because he worked for the real estate firm but didn't own anything. So we got 5% ownership, so he could transfer that. Now. So I'm like, money, dude. It's your dad that owns it. I was like, you just need a couple points, dude. And so we were able to work that out. Now all of his rentals can be non-passive, and I was like, all right, this is sick.
Yeah.
But that to me is like, that's the godfather for sure.
What are some strategies that you've been able to get your clients into that have led to massive refunds?
Structuring a PE deal as ownership instead of debt. So in the debt world, it was ordinary. So he basically lent, let's just say, a couple $1 million, and it comes back to him in the first deal as basically interest, like income to him. So ordinary income. Structuring it as ownership to give him capital gain loss, and then leveraging that against some of the real estate portfolio was huge, because now we can take this huge PE exit with capital gain, obviously offset it with some of the real estate. So something like that. And I would say the short-term rental is still running so strong. Yeah. That river is flowing. Yeah. And that's just, that's something that, that well has not even near ran dry.
No.
And for me, it's just like someone could build a firm just on that strategy.
100%.
So for me, I just think that's still, it's so strong. So
I think that's how our firm got started, was really just exploiting the short-term and real estate professional status. I would say 76% of our clients are real estate investors.
See, it's interesting. We always usually say like 90, but again, it's nice because you probably have a bigger array of the movies and things like that. So doctors, dentists, lawyers too. We're starting to get more of those, and I'd like to get into more of that space, because for me, somebody was just asking me, like, it was actually this morning, our new marketing firm is asking me like, hey, what kind of client are you trying to drive? And I'm like, hey, I want the solo 1099 earner that makes $400,000 or $500,000, maybe as an agent or as a commission salesperson somewhere, great, that wants to invest in some real estate. But I'm like, give me the electrical contractor that has 15 employees and 10 trucks. Mm-hmm. Love them.
Yes.
Grow with them. Those kind of businesses are booming. So Yeah, that's a big segment for us. But real estate's huge. I usually tell people it's like 95% of the touch point. They either are an investor or an operator in real estate for us.
We love depreciation. When it comes to amending tax returns, what items would you put on an amended return that you feel like would not cause an audit risk?
We're doing one right now where a guy took Airbnbs to Schedule C, and it's very interesting, dude. They are timeshares where he's on the deed, and you only own a week out of the year. So when I first heard about this, I'm like, dude, you don't own this thing. Like you just have the rights to use it for a week. And then doing some more research, they're on the deed, and they each have a deed for their week of the year. And so in this case, amending Schedule C, going to Schedule E, and we have to split out. It's like a little over 40 properties between their own columns on Schedule E. So I would, I'd feel comfortable doing something like that because to me, we're going and now doing the right approach from the wrong approach.
Right.
For tax returns, and that's what we tell clients too is, hey, well, why are your tax prep fees so high? Well, it's like, dude, you need to not only look at tax as the opportunity to save, but we are a huge risk mitigation factor.
Correct.
From errors going on the tax return, from you making a non-allowed contribution to a Roth, and now all of this money that you're sitting there and growing is now subject to penalty and interest. So it's like you have to have a firm that understands what they're doing too with good technical expertise to help you risk mitigate and not just save and optimize. So for us, it's stuff like that on an amendment. But that's funny. That's been a hot topic for our firm too. Clients that come in, and I'd be interested to know how you handle this. Clients that come in with past year tax returns are sometimes always the worst. They're good opportunity.
We don't onboard any clients with past year tax returns.
Yeah, so you guys don't do any sort of catch-up tax returns. And I would agree it's good because it just shows like what kind of clientele you are. And two, it's you just clog the pipeline. You clog the pipeline gnarly.
It breaks your system that you have in place.
Yeah,
we only like working with people that are caught up in real time. Your books need to be in real time. Your tax returns need to be in real time.
Yeah.
Most people that come to us can't onboard for anything except advisory first. You have to build a plan with us. We have to understand your full picture, and then we'll earn your tax preparation business. But if you try to come to my firm and say, "Oh, can I do returns with you?" The answer is no, because our entire team is built out to assist you in building a plan first, and then seeing those plans into the tax return.
That's how you should do it. Yeah.
Well, it's just a reverse way of building a firm, right? The average CPA firm is going to start off with prep and then earn the planning business. But I feel like it's almost harder to have the conversation if you don't start off with trying to build a plan, because then your client's like, well, why didn't you come to me with this? And that's the situation CPAs deal with the most. Whereas as an advisor, I just say, hey, let's build a plan first. And then, if you have a CPA, great. We'll see that tax plan into the returns. If you don't feel confident with your CPA, we'll send you an engagement agreement and engage you for that.
And it makes your prep easier if you do the planning.
And the prep it's a retention measure because for many of our clients, like we really make a majority of our income off of the planning, right? But the tax returns is what they really want. They want to see the results. Well, let us be in control of making sure that the results get into the return.
And that's what we, back to that AI topic, have thought a lot about. I don't think people are going to like, oh, they come to TrueBooks, they come right like to Alchemy, and it's, hey, I just want my tax return done. I just want planning. Those are just going to be factors of an overall relationship that they're going to assume of course you're going to do those. And that's why back to the AI tools, AI should be able to run prep. AI should be able to get you equipped to do tax planning and advisory. It's the relationship that I think we need to all focus on while letting the tools make that relationship super seamless. Yeah. Because again, like everything's going to get commoditized to the hills of like, why just come to you and do my tax return for $400 when I can go here and have everything in one and a good relationship and advice. So, yeah.
When it comes to hiring CPAs, what do you look for in a good accountant or tax professional? What are the things you're looking for?
In the first 20 seconds, it's how you talk to me. And that's me banking on like, I have friends like I'm kind of an outlandish guy. So like I say things that'll sound so absolute and I'm no godfather of it. But if I have any talent, it is talking to people and kind of reading a room. Like if you're a weirdo, I'm going to know quick. And I think in the first 20 seconds of talking to somebody, how comfortable you are. If I'm in person or on Zoom, are you looking at me? How do you carry yourself? What's your background looking like? So first 20 seconds are big for me, like first impression. But then I think overall I look for kindness and like, hey, are you a nice person? Or are you kind of standoffish? That's a big factor to me. And then like our first core value at TrueBooks is helpful. I want you to I picture it as too. You walk into Lowe's and a person in a red vest walk up to you, your experience just got way better. You're knowing where to go. You're not wasting time walking down aisles. You know exactly what you're doing. So for me, it's like, is this person, do they seem helpful? Do they seem technical for whatever role I'm trying to hire for? And also the other one, like the big one for us is urgency. We were just hiring an admin. I was hiring 2 of them. One of them seemed super nice and kind, but a little bit too meek.
Yes.
And the other one, like you could tell if you weren't doing what she was asking, she's on your ass about it.
Wow.
Sorry. And I'm like, I want that.
Yeah.
Because that is, to me, is accountability. That's urgency. You want to move with that.
Exactly.
I can't have you being too passive and letting a tax manager roll over you for something that you're asking. I need you to make sure that they respect you for it. And so I don't want to train that. And I don't know if I have the skill set to do that. So you got to be a nice, likable person, and you got to have some urgency for me.
Why do you feel like the CPA industry has like high churn? Like I talk to other accountants and they feel like they're losing CPAs every tax season. Like they just churn through CPAs sometimes. Why do you feel like that is?
So it's weird. Our firm actually right now, right, and we'll talk about this later too, is we're going through a bit of a churn right now. And it's interesting because they're all different. One of them was going to be coached out and gone anyways. The other one is they need a super change of pace in their lifestyle right now. Like they have young kids, the role that they're in is very demanding, and they need to find something that is slower pace. But I think most of the time, like what you're hitting on, is I think that they go to corporate. I think public accounting can be a grind, and I think because of the ebbs and flows of busy season, like if you look at our graphs of production, March and April, September, October, you're grinding, baby.
Richter scale.
Woo! Yeah, so, and I don't think a lot of people are built for that. That's why I came right out of school. I know that. I was born and bred to do that.
Yes.
Like I told somebody yesterday, I lived the waterfall effect. When I sat in an audit room and it started with the partner down to the junior staff, you could not leave till the person above you left. And I've been sitting there with a manager until 3 a.m. So the partner had left at maybe 10. Senior manager leaves at 11 midnight. Manager staying there. The senior will stay there till 3 or 4, and you're leaving after them or with them if they're cool enough and saying, hey, cool.
Yeah.
And so I don't think that a lot of people want that, especially now after COVID, working from home and things like that. So I just think that they're not built for public accounting, and so they go to corporate.
Yeah.
Is what I think a lot of it is. And the last thing is for the people that do feel like they can start their own, because I've had people, it was funny in my time of like wearing the black hats, what I was kind of known for online. We had a guy leave, started wearing a black hat, making YouTube videos and online videos. It was a young staff. And I think that now in a day, they feel much more empowered that they can run their own shops.
Yeah.
And I think a CPA can do a good job running 100 to 400 grand from their basement, from their home office, because we both know that anything over that, you really start to get condensed on your own personal time. You need a staff, you need an admin. So they either want to find that sweet spot of making a few hundred grand from their home, or they're like, okay, I either got to join a team as an employee, or then I got to really put my boots on and go hire a team and get systems in place. So, but for us, it's been weird. A lot of the churn that we've had, they're all different. They're not really the same.
Yeah.
So that's why me as a leader, I'm kind of racking my brain like, oh my gosh, is this me? Is this...
Yeah.
So I'm like, oh, what is this, dude? Someone give me a book, bro. I don't know yet. So, but no, it's been a good experience.
Knowing what you're seeing in the industry with AI coming, are you focused on trying to grow your firm to eventually exit accounting? Do you see yourself having a lot of runway time in the tax space? Or is this something that you feel like is going to be a forever thing and you want to see yourself all the way through till retirement in tax?
So I think for me now, I am stuck on this is my profession for the long term.
Yeah.
Like I was just joking with my kids the other day. I'm like, hey, who's going to take over the family biz? And my daughter raised her hand and we're like, yeah, it's you. You boys ain't got no shot here. So I think, right, and that's like when I think back to my business partner, when I started the business, we started in 2020. I bought him out in 2023 because we had 2 different visions. He wanted to get it to like 5-10 mil, sell it. And I'm like, dude, I'm an accountant. What am I going to do here? I got nothing else.
Yeah.
So for me, I think it's me just being hopefully humbled in the fact of like, I don't know of anything else I would do. But we both know in this industry, there's a lot of opportunity. You land a new client, they're like, hey, come do this deal with me. Come help me structure this. So if something presents itself, maybe, but I do want to build so that in the event I wanted to sell, it's a very poised business. Hence why, like, you're not doing your taxes with Matt. TrueBooks is the firm.
Right.
People work for TrueBooks. They don't work for Matt. These are not Matt clients, like that kind of thing. So I do want to build an enterprise. And so, but yeah, so my goal is still stick it out for the long term until I see something else.
When it comes to tax strategy, obviously me and you are pretty proficient in tax strategy. There's a lot of CPAs and tax professionals that look up to us. They want to understand, like, dude, how do I get the training on tax strategy like they have?
Yeah.
Well, where would you point them?
Yeah, that's good. I honestly would start with YouTube content, your stuff, Amanda's stuff, just other creators within the tax space to get acclimated to what these things are.
Yes.
And then I think then they got to spend a couple pennies to go to some workshops. And this is where, I don't know if you go to I go to a CPE conference every year and it's 5 days. So I just knock it all out. Dude, I am the youngest person in that room by 40 years. And all it makes me think is I want to walk around and ask for business cards and start buying these practices. But I think that they need to spend a couple bucks and go do some online courses, because to me, what I don't like about tax is the barrier to get in. And it's because if you wanted to go out and start your own tax shop with no experience, that's very hard. How do you know how to prepare taxes? And me and you preparing taxes, we had somebody review our tax returns and give us a red pencil full of notes and say, go fix this, go change that, you missed this. Without that, you are dangerous in this business.
Yes, you are.
And you're just asking for something to go wrong. So that's where kind of good for the people that are in it, but bad for people that want to get into it, because it's like you need to work under somebody, I think.
Yeah.
So, but I think they need to watch YouTube and online content and then pay for training, like workshops and stuff from like licensed people or people that have experience in doing it, you know, EAs, CPAs. Yeah.
Or me and you teaming up and putting together a training to train everybody else.
So somebody just asked me.
Come on, chat. What y'all think on that?
Dude, somebody just asked me the other day. They're like, dude, why don't you go out and show what you're doing to other firm owners? And my small mindset was like, dude, show me a firm owner that wants to know it. And I'm like, I'm sure they're out there.
Bro, we would wreak havoc on a joint webinar, because I'm an EA and you're a CPA. So we'd literally speak to the whole industry.
The whole audience. Yeah, for sure.
We're about to go play golf right now. I think that'd be a good conversation for us to take out to the course.
I like it.
Matt Bontrager, CEO of TrueBooks. Where can everyone follow you at?
Instagram. Just, at Matt Bontrager. That's it. That's like my main social. You'll see me flying RC planes, playing with my kids, or doing taxes, talking taxes.
Thank you so much for joining us on the show today. Thank you guys so much for watching this episode. Another one on Wealth Made Simple. If you're new to this channel, go ahead and hit the subscribe button. And already you guys can tell this was a great episode, but we're probably going to bring Matt on closer to the end of the year to talk about some year-end tax strategies that we can help you guys implement to save some money. Thank you so much, Matt, for joining us.
Thank you, man.